Hello, it is Thursday the 10th of July. Let's take a look at where we are in crypto and some trade ideas because the whole world is really excited because after a couple of months of sideways, Bitcoin is finally catching a bid. We're seeing record prices on several exchanges. There is a couple of things that make me a little bit nervous. So I'll talk about what we need to see if we are going to keep going. Also in the crypto space, there's a lot of excitement in the artificial intelligence space. You know, some tokens associated with that, such as Fetch and Render, Bitensor, ICP, all doing really well in that space as well at the moment. The catalyst, and they really are very correlated with NVIDIA, and NVIDIA made a new market valuation of 4 trillion yesterday. So that's been a really big deal. So in crypto, everything is good, right? Everything looks fabulous. We're making new highs. Everything's going higher, right? Sadly, not in the NASDAQ, which it's still looking pretty double toppy and sideways, which is a little bit of a warning because crypto, and particularly Bitcoin, is very correlated with the NASDAQ. But the S&P keeps creeping up, and, you know, we could keep going despite everything that's going on in the world. You know, the tariff drama is all back on again, and it all looks really political. You know, when we first heard about tariffs a few months ago, we were told it was all about the trade balance, you know, and if you bought more from America than you sold to them, that you were going to be fine. And here we see Donald Trump threatening a 50% levy on Brazil, and Brazil is one of those countries. If we take a look at the balance of trades, Brazil and a lot of South America really have trade deficits. You know, they buy more from America than they sell. So this has got the market upset because it's clearly all about politics and BRICS and not really much to do about trade balances at all. So let's take a look at the weekly, and whenever we have broken out from sideways consolidation in Bitcoin, we have tended to see moves that keep going. In other words, they go up in a straight. This is a very Bitcoin pattern. We go up in a straight line and we see very only shallow pullbacks on lower time frames. We saw that back in 2023, in 2024. You know, we saw when we bottomed here and we got back above these weekly moving averages, really strong moves with very shallow pullbacks. So if this is a real move and it's going to keep going, we're likely not to see big deep pullbacks. And if we look at the fib targets that I've been using, have been from the high in November 2021 to the low in October 2022. Quite often the 1272 and the 1.618 become really good targets. They were the first time we tagged it. We saw a really deep pullback from this 1.618 extension. And so for me, once we got above and we hold above it, as long as we keep making a new high in terms of fib projections, my next upside target is up here at 155. Now I don't think we're gonna make it this week. We've got a big options expiration on the futures next week. But if we keep going, I wouldn't be surprised the way this unfolds if we don't get there in kind of 4 to 6 weeks, which puts us up here in August. We need to make sure though that we keep going. And let's go down to a lower time frame, to a daily, because this is the breakout that we made today. Yesterday we paused at this previous high. If we do the same thing on this lovely 3-wave correction that we made, we can get some interim fib target levels from this. So we've gone from this high here at the end of May to the low that we made end of June. And so if we do this, our 127, we've got 112, basically 111,965 is our equal measured move. The 1.13 is at 113,700. 115 would be the 1272, but this round number 120, which works. You know, these round numbers are really important because they are options strike prices, and you often see very big volumes at them. And you can see here the 120, then 134, and for me the next fib projection, the big 4.236 from this high to low, lines up exactly with this bigger 2.618 extension level. So those are the kind of levels that I'm working with if we keep going. Now, why am I being a little bit cagey? It's not just because today is a full moon. Today is a full moon. Sometimes that's endings. What we've seen is a massive catch-up move here in Bitcoin futures, because I was thinking, well, this is looking good, but why aren't the futures at new highs? Why are we still underneath them? And if we look at the high we made in January, the yearly high to low in these futures, here we are tagging it. And it's so common in crypto, and particularly in Bitcoin, to make a high or low, retest that low, and not being able to hold and close and continue above it. You saw it here. We made a high, slightly higher high, and that was a reversal. Low, slightly lower low, couldn't continue. That was our reversal signal. It's very common in spot Bitcoin and in altcoins as well. So if we look at these Bitcoin futures, we really do need to hold this high, and this not kind of to be the full moon top turning point, if you like. So again, if this is a real breakout and we are really going to keep going, then the pullbacks will be shallow. One thing about FOMO, and when one thing I really don't like to see when a market makes a new high, is it just sits there and goes sideways. It's always a little bit nerve-wracking that what actually we might just be seeing is distribution. What we really want to see is people afraid they're going to miss out and buy into this. And so again, if this is going to keep going, we will see shallow pullbacks, just like we have seen since this low end of June. We have a big move and then we go sideways and continue, and that's what I expect to see if we are going to keep going, and that should last into options expiration next week. One of the things how these big options expiration help us is the market makers try and keep it in a range where they're hedged, and when you get a breakout of the range, the market makers have to buy it too to offset their positions. And so you tend to get a little bit of a rocket fuel move when everybody's looking at the same big levels. So in the spot, potentially for today, this 113,700 might be it. If we keep going, 115,674, and then we should see a pullback before we continue, and the next upside for me would be 120. I think, though, in terms of Bitcoin dominance, I'm starting to think that some of these altcoins have much better potential. Let's start with ETH dollar here. One thing you can say about these markets is the daily 50 moving average. It can be very, very strong support and resistance. And when you close the other side of it, you almost never close back underneath it if you're going to keep going, and you see a really strong move. And so if we look at the weekly here, you can see that we've had 2 months sideways underneath this weekly 50 moving average, and this is the first time we've blasted back above it. We should keep going. We've also, if we measure from this high to low, this 50% retrace from this high to low at 2,744 was really important resistance. Every week we tried it and we couldn't close above it, and so now we should not close back underneath that level if we're going to keep going. And here on the 4 hour, you can see everything's getting a really nice big bullish buzz. So if you are long or you're looking to buy, that's where you're wrong. A close back underneath 2,744 in Ethereum. Don't, you kind of want to buy as close as you can to where you're wrong and make sure that it keeps going. But if this does, and this, as you can see, the big move in Bitcoin is the love is spreading out to some of the bigger alts, and then hopefully down to the smaller ones, because some of the even meme coins have some pretty interesting bullish chart setups. So let's take a look at some of them. So Solana, which I haven't been so excited about lately, I have to say, and I did a deep dive for why. if I look at the low from the lows in December 2022 to the highs that we made here in January at the start of this year, we've been going really sideways since March in this 61.8, 38.2 golden ratio zone, where we kind of went sideways from March until kind of October last year. So this is a very tricky zone for Solana, in between 185 and 117. And I have to say, it looks like potentially here's our first swing higher. We're back to the middle. If we continue and we keep pushing, we should retest this 185 level. Potentially, markets very often make, even if it's just a corrective bounce here, if we make a bigger three-wave equal measured move, the second upside target in Solana, if we continue beyond 185, should be 218. The most important thing when I look at this weekly is, for 6 weeks, we have been stuck underneath this weekly 20 moving average. This is the first time we're closing above it. If we look at Solana on the daily, you can see that yesterday, for the first time since the beginning of June, we closed back above that daily 50 moving average. That usually sets us up for a much bigger move. Now, we've got a bit of a sticky level in the middle and the daily 200 moving average, but for me, fib patterns say we should keep going higher, and we should actually retest these highs at 185 in Solana. Ripple has been on a rip, and this sideways range really since January has been very frustrating. But one thing you can say about it is it's choppy, overlapping and corrective. How do I know that? Because when you're in a trend move, you'll see really strong moves higher, sideways, and you'll keep going and you'll ride those moving averages. Here in Ripple on the daily, we've gone sideways, they've all bunched up. And if we take our first swing from the lows in April and pretty much everything bottomed, here we are back again. So even if this is just a corrective move and this is our first swing, if we measure from this low to high, project from this low, our first upside target is a little bit higher than where we are now at 2.55. Yesterday we closed above the daily 200 moving average. This should keep going higher. Be careful buying into this level here and these highs, because it might get a little bit tricky around here. But if we close and hold above 2.55 in Ripple, we should continue to 2.95, which would be this equal measured move here in a swing. And you can see we did this three-wave move here. We could see a three-wave move higher. So 2.55 might be a little bit tricky around that level, and then 2.95 next on the upside. One thing, if we get here, rather than if we can get above and hold above this level, you've got something to buy against, rather than just, you don't want to get top ticked in something like this. So that's how I see Ripple. Doge is another one which might not quite have gone yet. If we look at the daily, so in terms of big fib patterns, when I look at the lows we made all the way back in 2022 to the highs that we made at the start of this year in Doge, then you can see that we have been finding really good support down here at 0.142, which is a 786 fib. When you do this and you get above this 61.8, really our first target is up here at 0.31. But even if we just do an equal measured move, that should bring us back to the 50% and kind of equilibrium in this price in Doge, because that would be our kind of equal measured move there in the middle at 0.26. And so today, you can see, if we look left at this daily 50 moving average, you can see previously when we got above it, it's been really good support, and underneath it, it's been really good resistance. Yesterday it was resistance. If we close above it today, and the price of this moving average is at 0.183 in Dogecoin, then 0.183, we should not close back underneath that, and we should see a much bigger move higher in Doge and a bigger ABC. So if we measure from this low to, as I said before, kind of our first most conservative target would be back here at the 200-day moving average at 0.22. So 0.215 to 0.22. First minimum target really for Doge. If we can close and hold above this daily 50 moving average today. So we've looked at Solana. Let's look at some small ones. And I know I said this before, I really kind of like the utility coins. I like exchange tokens. If we get another bull run, normally in the year following a Bitcoin halving, the second half of the year is, if we're going to get kind of alt season, that's usually when it happens. And so here we are, we've just got to the second half of 2025. And so if we're going to have an alt season, kind of this is when it's going to be. And some of these are setting up really nicely. I think you can start in the utility tokens and the ones that make money, but there are, even in the meme coins, some that are looking really interesting. So we'll look at Hyperliquid at the end. But some of these that are doing, this is SPX 6900, which has made a really nice fib pattern. If I measure from the high this made in January to the low this made in March, we reversed at this 886 fib level. When you do that, if you're going to keep going high, you usually pull back to the 50% here in the middle, which is exactly what we did very nicely in SPX. Now, sometimes, because this was a big three-wave move, it could potentially just be a bigger three-wave move. So we have 1, 2, 3, we go 1, 2, 3 the other way, and we could do a bigger one, a third swing lower here. But for me, this is looking kind of really looks like this may be done. And so the first target is going to be a retest of this 886 level, because if we go beyond that and we kind of go beyond this measured move, we need to be looking at buying pullbacks. Then a retest of the highs, and this tippy top high here at 1.8. But really, because if we measure our fibs from this high to low, I'm going to look at these projection levels, 2.22 and then 2.76 in SPX 6900. And people might say, oh, well, that seems really a bit excessive. But with these crypto, especially these kind of smaller, more volatile coins, the fifth wave is usually the longest and extends quite a long way. So we can say with this SPX 6900, I think we should see new highs. 2.22, I would say for sure, maybe 2.77. And then we would be looking at kind of wave 1, 2, this is a big wave 3, 4 we've finished. If we make and we hold above 1.62, and then 2.22 would be our next upside target. Around here, around these previous highs and this swing high, if we're going to get some sideways or some pullbacks that you can buy against, this is the kind of range where we are likely to see it. And we just kind of need to be a bit careful, that everything keeps going. And this is not one of those kind of full moon, fake out, false breakout moves. Okay, let's look at some more. I'm going to look at Curve. So one of the rules I have for a reversal, or the fib pattern that I look at, one thing, whenever I draw fib retrace levels, the 236 fib is the most important, because it kind of validates that you've drawn your fibs higher. So if I do it in Curve Finance, from this high at the end of December to the low that we made in March, the first time that we tested this 236 fib, you can see we got a really nasty pullback from it. And when we got above it, it became support. And this works on smaller levels. When I look at what we've done in Curve Finance from this low in March this year, 1, 2, 3, 4, 5, up, this looks like, and then a lovely 3-wave pullback in Curve. So if I do the same thing with fib retrace levels from this low to high, so this is the high, low to high, here we are at that 236 fib level. So we might have a little bit of a wobble here, and you can see also there's pretty decent support and resistance around this level. If we look at it horizontally at 0.57, these lows, these highs here, in fact that was the breakout level before. And so I think if we can push through, this is another one, if we can push through and hold above this, next stop would be 50% of this swing. And then, for me, when I see a 3-wave correction like this, if it's just going to be 3 waves going the other way, for me, usually the minimum, or the most common, I don't want to say it's the minimum, the most common is a 786 retrace of this 3-wave move. The 50% level here in the middle, so 0.67, is always going to be tricky, and you may see a bit of a bigger pullback here, but for me this is the most common level that we reach from a big 3-wave pattern like this in curve. So if this one is going to keep going and this is not a fake false breakout, I'm looking to see if Curve Finance can hold above 0.577, and then 0.67 should be next on the upside in this one. Okay, let's look at some memes, because some of them are pretty exciting. Let me find my list, and we will look. Floki's pretty interesting, but Dog with Hat, I've been talking about this one for a while, and the reason that I really like this pattern is this is another one. This looks like 5 waves up from the low that we made in April, and even if it's not, this definitely looks like a very nice textbook 3 waves back, and yesterday closed above this daily 200 moving average that was previously resistance and has previously been pretty tough in Floki in terms of support and resistance, and I think we're on our way higher now. If I zoom out in Floki and we look at this big swing from the high in November last year, remember that fib level that we need to close above where we couldn't. So this is the first fib retrace level from this high to low, 1.37. So on closing above this 200 moving average, that 1.37 is going to be our first target. Lines up with a lot of support and resistance here as well. And if we measure our swings, and if we just get up there and fail again, this means this was corrective. And if we look, 618 of this first swing is at 1.3. If we get above it, 1.71, and then this is really going to be the bigger level for me if we keep going, 2.55. But then I have to say, you know, this kind of looks like a bigger 1, 2, 3 going on here, which means this, you know, we could be looking at something much bigger and new highs for Dog with Hat, which seems, you know, crazy, but the world is crazy. The United States is printing money and spending money like a drunk, and that kind of means that this may, you know, this is a pretty good place to be while the rest of the world is crazy, and we may see this behaving. But key level here is going to be this 1.37 to 1.4 zone in Dog with Hat. If we get above there, we will be kicking with gas and on our way up much higher from here. Floki is another one that's looking really tempting as well. Let me find Floki. Here we go. Right, testing this, just like Doge, really testing this 200, big deal moving average, big deal swing high here. And it closed above this 200 moving average. We should really fly. You can see before, you know, in 2024, when we went sideways and kept getting stuck underneath this 200 moving average, it was support, then resistance. When we broke above it, we saw a really powerful move higher. And again, in Floki, this is starting to look like a very big 1, 2, 3 wave correction. And so when it looks like a big 3-wave equal measure move, I put my fib retrace levels over both swings. So we go from this low to high. No surprise, that's where we got stuck before. This 236 fib level at 1709. So if we can close and hold above this support and resistance level and above this daily moving average today, and it's not just a full moon fakie, then this 1709 will be the first target. And we should see a rally that continues into August. And if we can get above it this time, I'm going to put in that 38.2 because I think that an equal measured move might be a little bit tricky here. So we would see 1, 2, 3, something like that. But really, if we keep going And we see a really strong swing next for a wave 3, then this 50% next at 19,723 should be next for Floki. So I'm pretty excited about that one. Even Pepe, so like all of these bigger memes are looking pretty interesting. Let's find Pepe. Here we go. Another little one of these tokens that look like it's made a very nice 5-wave rally from the lows and from the high that we made in May, a big 3-wave equal measured move pullback, and potentially these moving averages on the daily should have been resistance, and today we've broken above them. Now, we did this before here and we couldn't hold them and we fell back underneath, so that would be where this trade idea would be wrong. Okay, but the good thing, you know, it's all about, trading is all about managing your risk, and managing your risk means how much you lose when you're wrong. So if you buy as close as you can to where you're wrong, then your losses are smaller. And that's really what I think we're looking at here then with Pepe, basically 11,000, and where the 200 moving averages on the daily is where we're wrong if this isn't a breakout from this 3-wave pullback, and where we keep going higher. And 50% and 786 of this move should be next. So that's 12,300, and let's put in that 786 fib retrace level, 14,600, and then, you know, really, even if this is just a big corrective move here in Pepe, let's measure this first swing, project it from here. So it's not 14,000 and change, it's actually 15,000, which is where this swing would be 61.8 of this first one, which is very common in the correction. And the equal measured move, 19,300, and then up to the highs and 26,000 in Pepe dollars. So these, you know, these are really exciting moves. I mean, there's so many I'm not going to cover or have time to in this one. You know, there are an awful lot of them that have really neat setups. I quite like Pengu as well. But it's a little one that I like to trade. And look at this lovely bottoming pattern that we are setting up in Bird. So you can trade this widely. No surprise, if I put my fibs from the high in November to the low, this 236 fib level is the resistance, is a 0.05, and that is also, if this is an inverted head and shoulders pattern neckline, that's kind of where our neckline is. Even if we draw it with a slope, so we go from this high to here like this, even if we break out, that kind of is the horizontal resistance level at 0.05 that we need to get above to keep going higher. And then of course, if we do that, we should see 50% of this swing, which would mean if you close above that 236 fib, there's our first target, and that's our measured move target for the inverted head and shoulders pattern, whether you draw it horizontally or otherwise. And that gives us a, you know, this is the resistance. So if we're looking down here on the daily, we're going to hold above this daily 50 moving average that we've broken above today. So that's where we're wrong. And this is just an ABC. So it needs to hold above 0.027. And if it does, our target is, first target is 0.5, and our second target, if we break above it, is 0.1 for Burt. I think this one would be awesome, and these patterns work really well. So that's one of my favorite little ones. Let's talk about Hyperliquid and Useless. Now, Useless has been such a fun ride. Let's talk about why, and fib projection levels. So you can take, if I measure this first big deep pullback here in Useless, which was pretty clearly 3 waves, this is where I put my fib projections from. And if you look at the settings, that I have here. 1.618 is usually my first, 1272 is too, but I try and keep my chart a bit tidy and I don't put them all on. If you get above the 1.618, your 2.618 is next. For me, the next one is the 4.236. These are kind of wobble levels in the middle. 4.236, then 6.854, and then 11.09, and then 17.94. You can customize your fib levels. I need to make a video about how to do that. So here I have got each of these fib levels, and when I look at them in useless, they all worked really well. The 1.618 was resistance, then support. The 2.618 was resistance, deep pullback back to this 1.618. When we got above it, it was support. The 4.236, a little bit messier here, but this 6.854 was our target. And here on the lower time frames, we are now holding above it. So, you know, if you're looking at trades where you can minimize your risk and you know where you're wrong, if we're going to keep going higher, and this isn't a kind of big ABC here, which it might be, we should not really fall back and on a daily close back underneath 0.297. That's this support and resistance level kind of here. We could give it a little wiggle room underneath intraday, but that's kind of the level that on a daily close that I'm watching. Why might that be? If I look at this on an hourly, potentially this was just a kind of three-wave equal measured move that got a little bit squeaky. But remember, in crypto, a high tide floats all the boats. And so if Bitcoin and the love is everywhere, then it should all keep going. So that's what I'm looking at. So really underneath 0.29, I think that we may be in a bigger sideways before we continue higher with this useless token. Quite a lot of the bonk tokens are doing really well. I've been looking at a few of them. Bottoming, and so yeah, there's a few out there. Send me any requests that you'd like me to have a look at and I will do that. As you know, Hyperliquid, as I said, I'm pretty... Now, big picture, let's talk about these three-wave corrections and fib projections. So let's take that away and tidy up here. So in Hyperliquid, I'm going to put my fib retrace levels from this high to this low, as you can see. Now I had all these levels in the middle, we worked our way up them. 786, we got above, that should now be support. If we put in that 1272 level, that's where we've been going sideways here. And for me, this 1.272 level is important because if we hold above it, this is again where we would be wrong, and our next upside target is 51 with this Hyperliquid token. And if I go down to the daily and we look at these levels, you can see this was really important resistance. We were here for what, 6-8 days, and so holding, if we close above 42.46 and hold above it, next upside target for me in this one, Hyperliquid, is 51.47. Just remember that high tide floats all the boats, and really Bitcoin, this needs to not be a kind of fake out move in Bitcoin. It needs to keep going, and then the love will keep spreading. And you know, Trump owns 500 million of ETH. I think if ETH can hold above this 2,700 level, kind of want to be on the trade. They are very interested in making money, so am I, so don't mind joining them in that trade. So 2,744 underneath there is where I would be wrong in ETH. Good luck.